Hi everybody, welcome back to the STEM at the Account Aggregator Hackathon masterclasses. Sorry for the delay we just had, or some slight technical issues, but we're finally live and we're really excited for this session. Before we dive into the session and I introduce the speakers, a little bit of housekeeping. Presentations are on Saturday, 1st August. So that's in just a few days. The hackathon's almost over. So the way it'll work is that teams will present on Saturday. You'll be given a slot and you'll present to judges. The top teams will present again on Sunday during the closing ceremony, and that's when we'll give out the awards and stuff like that. So the format for how you are to submit your projects, I will share right now in the chat. Basically, you need to upload your projects on DevFolio. You need to upload like a write-up about your project, some screen grabs of a demo, as well as some screenshots. So I'll put that in the link, in the chat. So please do check that out. Okay, with that out of the way, very excited for this session. We have with us today three speakers from Bain and Company. We have Mr. Ramganesh Iyer, who is an expert partner at Bain in the financial services practice with expertise in fintech. He has about a decade of consulting experience across banks, wealth managers, insurers, and fintechs, and several years of experience as a fintech entrepreneur himself in the field of robo-advisory wealth management. He's also joined by Mr. Bharat Kumar, manager at Bain in the private equity practice with 5.5 years of consulting experience and several commercial diligence and portfolio strategy projects in fintech for US, European, and Indian assets in as well. They'll be assisted by their colleague Angad Kapoor, and they'll be talking today about open banking. So without any further ado, please welcome our guests, and over to you guys.
Okay.
Hey Ariman, could you project the pages that we send over to you?
Yes. Okay, we are ready to go.
I can't see the screen.
Can you guys in the audience see the screen? Could you send some thumbs up if you can see the screen in the audience? Okay, so the audience is able to share the screen.
I'm unable to see the screen, but I'll just...
Sure. On that, Bharat, can you guys see it?
Yeah.
Okay, could you just give Ram some cues about which slide we're on?
Sure.
We can pick it up locally and we can go with that.
Why don't you flip to the first page and I'll
Okay. So if you go to the page number 2, which is the open banking page, I think what we are saying is that what you see at the center of it, which starts from omni-channel bank, is the way banking typically operates today. Which is to say that at one end they have the front end where they acquire customers, they service customers, they have apps and so on to serve the customer. They have their own distribution. They have their own products, which has different teams kind of serving loans, serving deposits, third-party products, and so on. They carry out their own analytics and they run on their own tech stack. So their infrastructure is also there. So it's a combined, holistic, kind of a bundled offering that banks have. Whereas if you look at what is our Bain view of how this is going to shape up in future, it's going to be completely disaggregated. And this, we see it already happening in bits and pieces already. So for example, at the front end, you have who owns the customer, and as you see in the case of, for example, payments in India, over 90% of the payment market share is captured by the likes of Google Pay, Phone Pay, and Paytm, while all the banks, despite them having the payment rails, have less than a 10% market share. So basically, the front end of the bank is being captured by what we call in more broad sense the ecosystems. Now what these ecosystems are doing is using the bank's infrastructure, but specializing in a front end that kind of owns the customer. So that's happening, and you see multiple variants of that, and you see these multiple ecosystems in different parts of the globe, and in India, as I said, in payments, that's already happening. Uber is another example in a non-banking world where Uber owns the customer while not owning any of the cabs or any of the assets. So the ecosystem players are taking over the front end. The second is the banking experience itself, which is the transactions that you do in a bank, for example, savings, investments, borrowing, getting protection, and so on, which is again getting separated. So again, there are specialists. In India, you have some of the aggregators, for example, Paisa Bazaar, Policy Bazaar, Bank Bazaar, etc., which are kind of aggregating these products. And they are providing the experience to the customer, while a bank may still provide the balance sheet. So in that case, the bank becomes purely a white labeled kind of a provider of the balance sheet, while these players provide the entire front end and the entire experience to the customer. The third is the component experiences. There I'll give you the example of Credex in India, which does invoice discounting. Again, Credex today does not use much of its own balance sheet. It's simply a platform where it aggregates banks willing to do invoice discounting with customers wanting to do invoice discounting. And hence what you find is that a bank is again being reduced to a kind of white label provider of loans rather than providing the end-to-end experience. And finally, you have the infrastructure. There again, there is the traditional banking infrastructure and the digital infrastructure. Today, as we are all aware, the digital infrastructure is being completely captured by Amazon, Google, and Microsoft between their three platforms. While the banking infrastructure is again getting unbundled. So, for example, there are players which are providing balance sheet services as well. For example, Alipay is doing its own, Ant Financial, which is Alibaba owned, is doing its own lending. But there are also players which are riding on the balance sheet of others with various models such as first loss default guarantee and so on. So while on one hand you can have a pure broker that provides a kind of fees riding on somebody else's platform, on the other hand you can have lending of your own platform, and you can have various intermediate stages between them, such as first loss default guarantee. So what we find is that across banking, across the world, this is the underlying feature that is moving towards open banking, which means that the banking model, which was an omnibus model historically, is getting completely disaggregated and separated between the different components of banking. If you go to the next page, the need for open banking, there is a threefold pressure. There is regulatory pressure, where regulators are trying to increase competition. They are trying to provide more services. They are trying to give customers the ownership of the data rather than banks having the ownership of the data. So that's driving open banking. The second is the competitor tech firms. While historically the competition from banks has only been other banks, especially in India where licenses have been hard to get. But increasingly, players such as Airtel, Paytm, etc., are providing a digital banking experience, and hence the competition from tech firms is increasing. And this is again leading to an open banking kind of an environment where they take whatever data they want from the bank and provide the kind of services and products that the customers want. And finally, customer demands. Customers want simplicity and ease of use, while traditionally the branch model was the way banks used to expand and the way banks used to establish connect with their customers. Customers no longer care about branches. They don't care about having branches nearby their office or home. They simply care about ease and simplicity of banking services and greater control over their data. So we spoke about, I mentioned briefly about customers owning their own data. This demand is coming both from customers and from regulators. So these are the three kind of features that are pushing open banking in the world context, but also more so in the India context. If you go to the next page, what will be the most, what will be the impact of open banking in India over the next 5 years? There are three scenarios that we foresee, and what we say is that the default scenario that we expect is the is the middle scenario where banks coexist with fintechs. But there are also, for example, in China, banks have almost left the entire consumer space to the likes of Alibaba and Tencent. So that's more of a big tech takeover kind of a scenario. Whereas in scenario one, the traditional model continues and regulators are shut to tech firms competing on an open banking platform. So what we see is in India, we believe that regulators will play a kind of a cautious but open role. And hence banks will coexist with fintech. So that provides an exciting opportunity as a fintech to do innovation, to partner with banks and offer the best products and services to the customer. One final kind of point before we move into how other countries have done it. For incumbent banks, depending on how these scenarios play out, we are on page 5. The disruptive scenarios will have different challenges. So from a banking, if you view it from a banking perspective, one is the banks lose the primary relationship with the customers. So that's something they have to get used to. While they will fight it tooth and nail, this is something that they have to kind of settle for. The second is the traditional profit pools, which because they were offering a bundled product, the profit pool was very high. But increasingly, if they get white labeled and they are able to offer only component solutions, the profit pool is going to shrink. They are going to lose data exclusivity because the likes of Sehmati are going to own the data, and rather the customer is going to own the data, stored in places like Sehmati, and hence the banks are going to lose exclusive access over customer data. Loyalty of the customer is going to be reduced. There is going to be fragmentation of the value chain and the bank's role, and there is going to be commoditization. So overall, we see this as a great positive for the customer and for fintechs. It's obviously a threat for the banks, but from what our discussions with the banks indicate that, they have kind of moved past the fear kind of mentality and are now much more open to, talking about what partnerships they can forge with fintechs and how they can really make use of this opportunity before their competitors do. So let's, having said that, now let's go to the next page, and Bharat will talk about, how have the archetypes and use cases evolved in other countries and how have regulations evolved in other countries, because India is still very early in its journey right now.
Hey Bharat, could you unmute please?
Hey, I'm so sorry. All right, guys. I was just saying thank you so much for joining today. What I thought would be useful for us to talk about a little bit is, considering that all of you are part of this ecosystem and are most likely going to be the people who are going to be building this in India. I thought it would be helpful to sort of show you what this is, how this has evolved in other countries, what sort of use cases, archetypes have effectively evolved, and a little bit about sort of how the regulations have evolved and how that is shaped. Hopefully sort of what this should spark is a little bit of maybe some sort of a creative thinking with respect to what can be replicated in India and probably what can be enhanced in India as well. So we start with the first question, which is say that what are the different use cases and archetypes that have evolved, and then we'll come to the regulations part. Can you move on, please, Ariman, to the next slide? Yeah, and I think it's important to lay the context of it, right? So here in Sehmati, what we're looking at largely is as naturally as it has happened, it's an account aggregator ecosystem, right? Which is where a single party will ensure the authentication and retrieval of consumer data, which is stored with different financial institutions, which are providers of FIPs, and then the users, which are FIUs, can effectively sort of ensure that post authentication they can effectively retrieve the data and then use the data in a sense for other purposes. Now that's the typical AA system. What is the next evolution of the system is effectively what we call as which is true open banking, as sort of banking as a service, which is to say that how about sort of we go beyond just retrieval of data and usage and actually use somebody else's front end to initiate a number of banking I want to say transactions, but also number of banking actions, which could be with respect to, let's say, initiating a payment, requisitioning a loan, maybe even sort of more complex things like sort of switching out your mortgage from one to another. Now, all of this ideally in an ideal state would want to be done by you want a really good front end, and it's not sort of curtailed by a front end of any one particular bank. And to enable such a thing, what we've seen globally is that we've seen the emergence of players which we classify as something called as banking as a service. Now, these effectively are players who don't own the front end per se, but rather provide banking, and like the name suggests, it enables sort of third parties to offer financial services products, but without having actually a financial services ecosystem on the back end, or sometimes even a license. Um, the ideal state, and we'll go through some examples later, but the ideal state situation would be something like, let's say, Uber wants tomorrow to provide a number of, let's say, prepaid, or similar example, simple example. Let's say you have Dunzo or Swiggy who want to provide sort of prepaid cards to their respective drivers who need to then go and use these particular cards at different let's say stores. Now at this point of time, the number of complexities that will require for them to do this is one. For they will need to, because it's an open loop prepaid card, they will need to in effect be registered with one of the three major card service providers. They will need to ensure that all the POS machines sort of send back the transaction details, and they're able to capture it so they know where is the spend for each driver been, what is the sort of at what point in time was the spend done, how much do we need to top up, etc. All of this ideally would be, building this themselves would be fairly complex and be very expensive as a proposition, because this is something that will be needed by many other companies. So in effect, what such a service is provided by is known as a banking as a service player, and this is something that we've seen a lot in other countries. So we'll go into some of these examples, but just as an overview, I thought I'll just provide this. Ariman, could you go to the next page, please? Yeah. So this is a sort of a broad sort of ecosystem of what we have. So in terms of an sort of there's sort of a number of players on this particular page, but I mean the one with the red box is largely on where we are, where a lot of this particular hackathon is focused, which is to say that these are open banking API providers which allow access to the user's banking or financial data. Um, and one of the sort of marquee companies globally which has received a lot of traction recently, having raised about 90 million in Jan, is actually Tink. Tink, for example, offers APIs to a number of banks, in Europe, which allows sort of its users. For instance, ABN AMRO had set up something called as Grip, which was a PFM, personal finance management app, and it's powered by Tink, in the sense that Tink enables connectivity to a number of other banks. So then, regardless of whether you're an ABN AMRO user or multiple bank users, you're able to see all the data in one particular place. And then, eventually the hope is that it'll also move into a two-way sort of a main. So just view, you're also able to make transactions on it. But the idea on this is, apart from that, if you look at the other sort of sort of columns in this particular page, you would actually see that there are other kind of BaaS players as well that sort of work. And these are players which in effect allow sort of third parties to provide the sort of sale or use of banking products. An example of this, you have Synapse, for example, that allows a third party to offer a bank account, which means to say that, for example, tomorrow if Amazon decides to, or let's say anybody else decides to offer a bank account, they can effectively start something called as an Amazon bank account, which in the back end would be provided or powered entirely by Synapse. Similarly, Marqeta, for instance, allows a lot of companies to issue white label cards, which is they have the entire APIs connect with all the card providers, except the front end is just customized. So, in effect, it's an extension of what is today called a white label card. Like, I mean, a Paytm City, for example, it was a white label card, but this takes it further to say that, look, the entire backend in that case is not a one-to-one mapping, but it's something that has been, powered entirely on Marqeta. And similarly, Cabbage provides an underwriting and lending platform, which allows a lot of front-end lenders. So tomorrow, as an example, if one of the new applications like which are holding a lot of the Kirana stores data, an example of that would be something like a Khata book, for example, would ideally at some point in time want to move into lending. The ideal state with this is either they make the entire underwriting platform themselves, or ideally what the right situation globally would be that they leverage the tools of some third party platform which has already done this work. So that's when somebody like a Cabbage effectively steps in globally and sort of provides that underwriting platform at the back end. So that's a sense of sort of banking as a service players. Our focus, of course, as a part of the discussion today is going to be the AA or account aggregator players that are there. But I'd like to keep a little bit of a lens over there because there is an eventual progression that will happen towards banking products as well. Alman, can you move to the next page, please? Yeah. So let's talk about a little bit of the use cases that I've effectively seen with respect to sort of open API players and how that's effectively played out. I think there are broadly sort of 5 use cases that we've seen. There could obviously be more, and there are sort of as we speak, I'm sure there are a number of these companies are working on more. But the ideal thing I think is the first one is sort of credit scoring, which is very simply to say that once I'm able to sort of aggregate your data from multiple lenders as such, I build sort of models on the back of it because I've seen data of consumers from multiple different banks and sort of multiple different cohorts as well. I can build much more effective risk management models that effectively provide some sort of a better or more enhanced credit scoring sort of reports, which can be then used by other subsequent lenders in order to sort of lend with less amount of risk. So that's something that Cabbage, like I mentioned earlier, is something that focuses a lot on credit scoring, and therefore is the ideal customer are new age lenders, which are sort of willing to use a lot more data in order to build their models. That's number one. Number two is investment advice, which is based on your different sort of your, let's say, your income levels, your expenditure on different places, your cash in hand, etc. You have a lot of companies which are effectively able to provide the right amount of financial advice to you, saying, look, all right, you typically hold sort of X amount of money at this point in time. We suggest you invest, and this is your typical risk appetite based on your age and your spending patterns. We think these are the areas that you should effectively invest in, and that's the sort of that sort of a data will be really helpful. I'm sure a lot of you have heard of companies like Robinhood, which has been in the media quite recently for a lot of sort of trading by retail investors, but they've effectively used companies that sort of that connect with that provide the APIs to connect with different banks in order to get this data, and that allows them to provide superior investment advice. So that's number two, something that can be sort of at least in India, especially when as retail investors are just getting into this particular into the investment ecosystem, this again becomes a very important use case for open banking API players to sort of focus on. Third one, which is I think a fairly important one, is personal finance management. Now, PFM apps typically sort of consolidate all your spends, all your transaction data, all your income data from a number of different sources, and they sort of aggregate that and provide this in one holistic view, so that a customer can know exactly that this is how much I earn and this is how much my money is going out in these different categories, and this allows them for things like budgeting, etc. It's a very, very important tool that sort of feeds into provision of different loans. So I'm not sure if you've if you've used an app. The closest thing that we have in India to that is something that Perfios does, or rather actually something that Walnut does, which if you have an Android phone uses your SMS data in effect to consolidate and sort of provide you a view of all the different spends in different categories. And the way this is sort of helpful is because then fintechs can then use that particular data in order to target customers with different kinds of loans, saying, look, hey, your spends are sort of nearing your particular income at this particular date. Why don't we target it to sort of like a 1 week personal loan in order for you to sort of tide over the last 1 week, as an example. But like I said, there are multiple number of sort of use cases that are typically developed by PFM apps, and this has become one thing that has become quite predominant globally. Mint, which was a QuickBooks product, has been quite famous for a while, but we've seen a lot more PFM apps come in. And an example of that in Europe, for instance, is the Grip app, which is built by ABN AMRO, which has seen a fair amount of traction actually, which again was provided by an open banking API player called Tink. The fourth one is payment authentication. Again, this actually in India is quite good already. Globally, this is something that is now a use case. But India having the UPI ecosystem actually sort of this is something that as a use case is not much there anymore. But the idea is that a lot of open banking API players would allow connectivity with multiple different modes of payment. I focus less on this because in India, actually, sort of we're far ahead in payment authentication compared to a couple of other places globally. And lastly, employee and customer onboarding. We're seeing some sort of attraction with this, which is today employee onboarding into your payment or sort of things like expense management tools are really sort of complicated and cumbersome and require a lot of personal sort of like a lot of people involved in sort of managing this. Ideally, we're seeing a lot of sort of fintech firms coming and trying to solve this. Open banking API players help this because you can speed up things like onboarding. Let's say a new customer is brought in, setting up separate reimbursement accounts, ad hoc accounts as needed, and then deletion as required. A number of other use cases that ideally would take a lot more time if done manually can be simplified by the use of open banking APIs, which again becomes an important use case. So at a broad level, I took a certain amount of time on this particular page. I thought it'll just be helpful to lay out the context here and say that these are obviously some broad case use cases that we've seen decent amount of traction, but there are a significant number of other use cases that companies are looking for, and there's a huge amount of opportunity in order. There's one step of getting the data and then using it for a number of use cases, but as this expands to sending the opposite direction sort of instructions, there are a number of other use cases that might come up as well. So just as a thought, if this sparks more ideas as you sort of think about not just this hackathon and sort of in future as well on what to develop. Ariman, can you move forward, please? Next slide. Yeah. So and if I talk about sort of the other sort of lens on this, is the first lens I said is what sort of a use case are people focused on, but as you would expect, a lot of as some of these players are emerging, but as they pick up a use case, and then the ideal state is for you to go across use cases. In a similar way, if you actually compare and see sort of who are you sort of focusing on, there are broadly we see either you focus on financial institutions, or you focus on fintechs, or you focus on some other kind of players, for example loyalty players. Now you have an FI focus, and the reason why this is different is because there are significantly different sort of landscape, and the kind of sort of the sales capability you need, the integration capabilities required, the regulatory capabilities are required in order to connect to these different players. So ideally, for example, we see somebody like a Tink, for instance, has connected itself with a number of financial institutions and focused on Europe. This itself is a massive task, and it's a strong moat for them, because as we speak, I think there are about 6,000 banks in Europe, and connecting to all of them itself it's a pretty monumental task. So they having built that is pretty phenomenal, and because it requires connection to financial institutions, it requires a very different skill set as opposed to somebody like Instant, who's more focused on a fintech sort of focus. And sorry, incidentally, there is some sort of a cross collaboration that's happening over here. If you actually look at it, Think recently, if you read about it, about a month ago, actually acquired Instant, coming back on the back of a 90 million fundraise that they're done in January. But the idea is that everyone now is trying to cut across and say, look, how do I expand my sort of skill set? But ideally, these are two very different skill sets. Similarly, for example, Plaid allows you to effectively issue cards. Plaid was a pretty big hot news, I think, about a few months back, maybe even longer, when it was acquired by Visa, I think for more than about 4 billion, as I think was the acquisition price. But ideally, their focus also to provide sort of cards as such, or ability for third-party players to issue cards as needed, as opposed to relying on a bank. So yeah, and the idea, I think the point we made here is, I think there are a number of sort of focus areas and a number of sort of geographical areas that that companies can focus on, which means there's ideally going to be a lot of sort of different players in this particular market. We're going to see some sort of consolidation coming later, but it's still a way out. As long as this ecosystem remains fairly fragmented, what we expect is that there's going to be a space for a lot of people to develop a niche, and that's something that we think is going to be the industry view, at least for the next few years out, before we see some sort of a consolidation that starts to happen. Ariman, can you move on, please? Yeah, and so what I thought is, let me just give you a little bit of an example of sort of what are some of the use cases. I'm not going to go through all of them, but just as an example, so we talked about ABN AMRO and Grip. Like I said, Grip was a personal finance management app. It's built on Tink. Nobody knows if you actually use it that this will be powered by Tink. This is entirely the front end is Grip, but at the back, the entire connectivity with With ABN AMRO, it's pretty obvious that will be internal data, but all the data that's pulled in from all the other applications, it's effectively coming in through Tink. So this, and the reason why ABN AMRO would want to do this is because this allows them to, with the view of all the customers and their users across multiple places, it allows you to give a lot more, provide a lot more offers to customers who may not even be yours, who are just using yours in general. The another one, for example, is Avios. Avios, for instance, is linked with a company called Fidel. Fidel is largely focused on cards, by sort of, and with a number of partnerships, at least with the three largest providers schemes globally. And what this allows Avios to do is to actually view customers' card spends, and this enables them to actually, they're a loyalty scheme. This enables them to provide more customized loyalty spends. And this is pretty huge because this actually significantly reduces their cost of customer acquisition and allows better targeting. Arima, can you move on, please? Yeah, and continuing on in this, the other one, another example, like I said, like SBAB, where SBAB is, I'm sorry if I'm not pronouncing it wrong, but actually it's a Swedish bank. A very good example of how they've actually leveraged this is they actually created a campaign. This campaign was called, it was basically a mortgage interest rate, which means if you own a house today, you can effectively refinance that house at a much lower interest rate, and they targeted customers by actually sort of allowing them to compare their current rates with their rates as offered by their bank. And because this was promotional, they actually were able to target significant number of users with a lot more conversion rate than they would have normally had they gone a standard digital route. So again, niche use cases of how this is effectively emerged, but a number of those things can actually be sort of emerging in India, and would be interesting to sort of think about how banks in India would think about it, and what sort of an API, how can API players actually enable some such use cases. Yeah. So that was it from the sort of the use cases and the archetypes that are typically evolved. The other thing that I want to touch on briefly is, cognizant of time as well, I want to touch on briefly is how has this regulations evolved in other geos, because this is an important part on sort of how this, what sort of an evolution are we going to see in India as well. So open banking regulations globally, and there are different places at different sort of in different countries or different geographies, but there are broadly about 4 aspects that all of them touch. The first is what is the threshold that is required for participation in this ecosystem, which is, if you are to enroll as an open banking API player, what are some of the key regulations you need, your eligibility criteria you need to meet, which requires things like your amount of time you've played in this industry, your security requirements that you need to maintain, your ability to actually sort of sustain in this particular market for a while. All of those things are part of the regulation. The second one is, what are the consent mechanisms and security mechanisms that you'll have to do? How are you going to sort of manage customer data? How would you ensure sort of the right amount of consent? When does consent expire? How does sort of can the customer easily withdraw consent at any point of time? How to ensure that there is complete obfuscation during the entire process, in the sense that the account aggregator should not be able to at any point of time see the data of an individual customer unless explicitly provided consent for them as well. A number of different specific regulations, and this in effect is one of the biggest hurdles, or rather one of the time that's spent by most amount of people from a regulatory standpoint. Third is the data sharing, of course, sort of which is again, who can you share to? How can they view it? Can they view it standalone? Can they view it aggregate? What can they do with the data? What can they not do with the data? That becomes a part of the data sharing standards. And finally, which is the last one, which is like I said, which is more reverse, which is coming up, is the payment initiation and transactions. In India today, UPI, for example, is a payment initiation standard, right? Which is, I am able to, using an API call, I am able to initiate a payment transaction through a bank without at any point in time touching the interface of that bank. Now, in future, the idea would be that I would be able to do a lot more with this transaction. For instance, I would be able to, let's say, apply for a product. I'd be able to maybe request a backup card. I'd be able to maybe apply for request a new checkbook. A number of other things can come up. So each one of them will be a defined transaction, The question really is, what sort of a transaction can I be sort of, can I do with this? What are the standards with respect to that particular transaction? All of that, in effect, would be something that is the fourth aspect of it. So these are broadly what it touches. And if I look at where India is today, and with respect to other countries, and I think the ecosystem participation, I don't know, overall thing what you'll see is that EU is possibly one of the, EU is one of the people sort of more to the right, and within that as well, UK is possibly one of the most advanced countries with respect to sort of open banking regulations. Well, to be said, because the PSD2 in effect had its origination in the UK and sort of had then sort of moved on to the European Parliament. But today, for instance, we have, in terms of ecosystem partition management, we are somewhat less advanced. We have some sort of partial regulation coming in on it, but the hope is to sort of as this becomes and moves out of pilot stages, this will move to the right as well. Customer ID, in fact, here we are quite good. The fact that we have a national digital ID, and this is something that similar to how you've seen in DigiLocker, where your Aadhaar becomes your single point in order to retrieve a number of your information. Very likely, this will be something that might actually be used as a part of ours as well in order to retrieve your financial data from a number of people. So that we're already set there. What we don't have today is a centralized framework for data security. That's in sort of addressing that, but UK is already even more advanced with the fact that CMA 9, which is the 9 biggest banks in UK, have a standard API and security arrangements that go along with it. In effect, so that's why you see them all the way to the right. US now CCPA, which in effect controls this to some level, but it still requires specified laws for data security. India PDPA is still in the works. Hopefully, coming out of this crisis, and we, especially considering a lot of transactions have probably moved online, we'll see PDPA actually come in as a priority and come up. So PDPA will start to push this a little bit to the right, and then I'll sort of the other actually DEP also comes in. We're going to see this sort of even move even more to the right. But this is an important aspect because without this, you're going to see breaches which affect sort of dampen consumer confidence. This will sort of help solidify, and a lot more banks as well as people will probably get used to this concept and sort of move on. The other one is data sharing management. Again, this is in India. It's today in a sense voluntary. It makes sense for you to do it, but it's not a mandate. In the EU, for example, after PSD2 became a law in 2015, it has been mandated that all banks, at least for the most countries, all banks are expected to comply with it and provide a basic set of APIs. In India, UPI today is a completely, fairly voluntary sort of an arrangement. It makes sense for banks to do it because otherwise you lose out on a lot. But in effect, you need to send sort of, as of today, you need to get membership to NPCI and then do a bunch of sort of tasks along with it. In the EU, for instance, all banks are expected to do it, and increasingly we're seeing even non-EU members, but in Europe, are sort of complying with this just so that they can ensure that they can also take advantage. But if hopefully if we see this and sort of it's mandated by financial institutions in future, then we can see this move to the right as well. And finally, with respect to payment initiation today, like I said, we're only seeing account information, which is only a one-sided flow. All I can do is retrieve information. In future, I would ideally expect that there'd be initiation as well as going in from the other side, which is I can provide instructions from one end to the other. Today, that exists only in the form of UPI, wherein I can initiate a payment transaction, but the ideal end state is that, and this is something that as the regulators consider a lot more of sort of transactions to be involved in it, the ideal state for a lot of ecosystem players would be actually to start building it, so that by the time it comes out, sort of they're in the right position to capture the customer immediately. So that's the last part with respect to the regulations. Are you going to move on? Yeah. This is a little technical. Can you move on to the next page? Yeah, that's pretty much it by the regulation. I don't want to cover the last one because it's fairly technical, but yeah, I guess that's it from us. And there's a lot of content I covered. My apologies if I went a little fast, but yeah, I'm happy to sort of answer any questions from this if any one of you has.
So, Bharat, thank you so much for that extremely informative presentation to both you and Ram. I think a lot of learnings there, and clearly you spent a lot of time thinking about this deeply. I'm very excited to see, the trend that you speak about, the disaggregation of banking. I think, as you point out, it's already begun here in India. We have, UPI, which allows you to make transactions from without ever going to your bank interface, and maybe that will now extend to not just UPI payment apps, but more broadly the same way that it has in the EU and the UK. But in addition to UPI, we have the Account Aggregator Framework, and we also have infrastructure banking as a service companies like Setu and Zeta. And I have a friend actually who is the co-founder of Juno, which is a neobank in the US. And I think he was telling me about the experience there. Just building a neobank in the US is very easy given the amazing infrastructure which they have. And I'm confident that soon in India we'll be able to offer a similar experience to fintechs. And something that we believe at iSpirit is that it's very crucial for this infrastructure to exist, so that different private players find it as easy as possible to build differentiated solutions. Because there's no one player who can build a one-size-fits-all model for a country as diverse as India. So we need lots of players, and for that to happen, we need great infrastructure. But really, really great presentation, and we'd love to take some questions from the audience, and I'd also love to pick your brain on a few things. So one popular question that came from the audience asks about Plaid and Tink, and what in your opinion did they do right? What strategies do you think that they followed that helped them get to where they are today?
Yeah, absolutely. So I can take this. At different points in time, we looked at both of them. That's actually a fairly interesting question. I think what you have to understand is that there is a. So the two things I believe that define success in this is one is a breadth of your connectivity that you've effectively established. That's one end of it, which is to say that number of sort of banks or financial institutions that you've effectively connected with, and something like Plaid has done really well. It's I don't know if you've read, but a lot of sort of places I call it actually sort of as the it's effectively known as a plumber. It's built the piping behind everything, and building the ecosystem. Building the connectivity behind is a fairly difficult thing to do, especially if you're not sort of built with a lot of if it's not supported by regulation. In the US, for example, it's not mandated for a lot of institutions actually to sort of connect with you. So Plaid over time has built this moat that allowed them. So the breadth of it becomes sort of one strong point. The other point which actually sort of succeeds very well is how easy is your connectivity with somebody else, with your sort of front end facing with your customer, which is effectively the front end of the user. The ideal state is that you should be completely plug and play for someone who's willing to pick this up without any customized integration, which is something when we actually compare Plaid and in Tink Plaid in US and sort of Tink in Europe and sort of some of the other players. This is something that's they've done phenomenally. So which is why what it allowed them to do is it allowed them to partner with a lot of legacy institutions, because legacy institutions today have in effect a lot of legacy infrastructure, and the as with legacy infrastructure, and if they need fairly sort of robust at the same time simple ability to sort of plug and play as well, because without that there's going to be a lot of complexities involved in setting this up and a lot of customization that's going to slow down their growth significantly. That's something that both Plaid and Tink did really well. So what we've seen is that they've had a lot of marquee customers which are legacy financial institutions, and that it's a virtuous cycle, because that in effect allows you to sort of gain more customers, gain more connectivity, and sort of that's where they built that sort of the virtuous cycle. It allows them to sort of grow significantly beyond. So we still think, I mean, Plaid of course became so big, a $4 billion acquisition is pretty huge, and Tink we believe is actually in quite a right path. I think like I said, of the many 6,000 plus banks over there in Europe, they have one of the largest, I think, connectivity in terms of depth.
Mm-hmm. So if I may paraphrase a little bit, these players sort of gave a great experience to the FIs and also to the developers, which was key. And they kind of went and did a lot of the heavy lifting with the FIs to kind of do low-level integration, which another one of our audience members asked. So they got that connectivity into these FIs, and then they were able to offer APIs connecting those FIs to fintechs and others, and that's how they kind of built up their moat and their business, is by having all these FIs on their platform. If access to all the FIs is democratized, as it will be in India through the account aggregator, then what do you think Indian companies, whether they're into the infra business like Setu, or whether they're account aggregators, What do you think? What are your views on their ability to build moats or build businesses similar to, let's say, Tink and Plaid?
So actually, that's
Sorry, guys. Looks like we have a slight network issue, but I'm sure that Bharat will be back momentarily. Yeah. In the meantime, could I just ask you guys, if you're putting questions in the chat, please make the questions a little
just
bit
to say what is your
more
latency,
specific.
which is
Sorry, Bharat, we lost you for the last 30
no
seconds.
way.
So right after you finish
So
the question,
so like I said, right, like we talked about two modes. One which is a coverage of, which is there. The second one we talked about is the user experience, which is the developer and the customer experience, right? I think a third one is the end user experience as well. The end user experience, in effect, is a function of your latency, which is there are a number of tasks that will be required, right? Which is one, the authentication layer. Two is the retrieval layer. If it's a real-time retrieval, then it'll be a retrieval layer as well. How quickly can you do it is actually a function of your. That's in this term, what would be a latency actually that'll be defined here. And latency is actually a big differentiator. It might be it's simple, but in a lot of places latency can differ significantly. So an example of a Tink, what it does is it has actually quite a low latency, which is compared to something like a couple of other companies who compared against, like for example, like a True Layer, which does pretty much the same thing. So latency becomes one big one. Another one is data quality and enrichment, which is what can you do. So one is about retrieving the data, but the other thing is what additional services can you provide with sort of how do you enrich the particular data. So many times what you'll see is there might be some sort of gaps in the data, which is or can you sort of use the different disaggregated data points to sort of come up with something that's a more cohesive story about the customer, and that will be actually quite valuable to your to the Tink's customer in this case. So let's say, for example, it's a lender, and your what you're doing is you're effectively getting in, let's say, data about different banks that the customers provided access to, getting data about, let's say, the income and the flow out. You're also maybe getting it from different cards that they're doing it. The key question is who can do the enrichment process better, which is can you provide an additional service based on all the different data that you're seeing, probably using what Ting does is it uses machine learning in order to provide better, in this case, better data as well as better sort of credit models. That is something that becomes another moat as well, because that you're constantly your value-added services also improves your pricing. And the last part which is there is some effect with pricing, but I really don't want to get too much into it. Most pricing is based on either an API call level or at a customer level, but that's fairly competitive. But there is some, as long as this does not become commoditized, there's some element of sort of building some modes with respect to pricing, and the only way you can do pricing better is with scale. You can probably price better. So then there's a virtuous cycle for sort of being the largest player in this particular market. So that's some of the modes. I don't know, hope that was helpful, but yeah, that's how we see the modes.
thank you for that detailed answer. I'd like to just sort of cap it off with a question for both Ram and yourself. So I don't know, maybe Angad, if you have Ram, maybe you can relay the question to him. But this hackathon is we have lots of developers taking part, lots of fintechs taking part, and a lot of entrepreneur and developer mindshare is on this space, and rightfully so, because it promises to be quite exciting. What are some areas for you that you are particularly excited about? And it doesn't have to be kind of it could be your personal view. It doesn't have to be the view of the firm, but just some areas that you think, okay, in India, this is a good use case or a good market that we will keep an eye on as Sehmati and account aggregators go live.
Angad, you want to relay that first, Ram?
Yeah, just which areas are you excited about in India for account aggregation use cases or industries that will benefit, and where should this developer and entrepreneur energy, in your opinion, where are good places to direct it? So audience, sorry, we had some issues, so we're kind of doing a relay of the communication. It's like it's a relay network.
Ramji's on mute, Angad, in case.
Yeah. I would say, two areas. I think one is, open banking. Again, I think given that India's model is likely to follow a middle path with banks collaborating with fintechs, I think there is a lot of opportunity. I think somebody had a question on Plaid and Tink also. I think there is a lot of opportunity to play that kind of a role in India as and when, the market for open banking develops. And the other point I wanted to make is the neobanking, which is slightly different but related concept, which is that, banks providing, or rather pseudo banks, I use the word pseudo in double quotes, pseudo banks providing a good front end experience to customers, while banks provide the back end savings bank infrastructure and are providing a lot of banking services around that, like Neo has done, NIYO Neo. I think there is a lot of scope in neo banking as well, and we see, for example, ICICI Bank taking a lead in this, but other banks are also talking seriously about it. So partnering with incumbent banks to offer packaged neo banking services, and again, that can either be a savings first and other services later kind of an archetype, or it can be starting with other services and coming to savings account at the end kind of an archetype. I think these have good potential in India.
Awesome. Thank you, Ram. So before we ask the same question of Bharat, I'd like to just make a brief comment on neobanks, since we have some audience members asking about that. So neobanks, at least as I conceive them, the bank RBI is not giving out banking licenses. So neobanks are typically going and partnering with licensed institutions, the same way that Synapse and other neobank. I mean, not Synapse infrastructure player, but Evolve is a banking player in the US which offers out its banking license to neobanks through Synapse. So Synapse builds the API that allows a neobank like Chime to say, okay, now create an account. So the account is created in the back end with Evolve, which is an FIDC insured bank, which means that the funds in that are insured if they're lost. But the front end is kind of owned by Chime or N26 or whoever. So in India, similarly, you have neobanks partnering with, which are tech companies basically. They provide the wrapper around the bank, which could be owned by any bank underneath, and then the bank handles things like account creation and stuff like that. And some popular business models are subscriptions or float revenues, which is the money that lies in the account that can be split. MDR and charging on transactions made with cards, and of course cross-selling products, insurance, savings, investments, things like that. So, Bharat, would love to ask the same question to you. Where do you think that this developer and entrepreneur mindshare can be directed in light of Sahmati and account aggregators?
Yeah. So my sense is that I think account aggregation is just one step. It's almost like a baby step that the regulator is going in, saying that, okay, look, can I sort of, with just one-sided view of transactions, can I do something? But there's a much larger play over there. My personal belief is that, but the other way I'm most excited is there are a lot of basic use cases that with respect to banks that have significantly that is significantly painful today. A very simple example of that would be for you to have a recurring mandate to pull money out of your bank. Today, for example, it requires you to sign an NACH mandate, send it to your bank, and then your bank can process it within 7 days. And it then allows you to sort of basically allows a third-party institution to pull money for your bank. Now, ideally, that's your clear next step use case for somebody like who's already having an account aggregation, because there you're effectively providing the same information, except the instruction flow moves the other way. I think that instruction flow is going to move in very quickly on the other way. It's going to come up with with more protected use cases before sort of they open up a lot more. But what I believe is that everyone should have a sort of should have an eye on the actual price, which is on the other information flow. Account aggregation is just one part of it. I actually believe a lot of people should start working towards the other side, which means that regulations you're always going to be sort of you should be one step ahead. Then sorry, I don't know if I got lost, but all I'm saying is if the regulations already come in and then you start building it, then you're already in my mind about a year and a half, 2 years out, which means that what I really think is that today would be the right time to start building in the right technology in order to sort of move all information on the other side, be it all the standard banking use cases, a request for a loan, a request for sort of setting up a mandate, maybe some other sort of banking request that you might have. Whatever be the case, I think the other side is what people start building in. And I actually truly believe that over the next 5 years, I think that would be a very important use case, at least with a lot of people in India.
Yeah, I totally agree with you. And the launch of UPI AutoPay, the infra is also getting there to enable easier repayments and stuff like that. As a final question, I think it's a very good question from Ankur Javeri at FingPay, who asks, would Indian consumers have confidence in neobanks and use them for their primary accounts? We've seen in the US and EU that people kind of open accounts in neobanks, but don't necessarily keep them as their primary account. So do you think that in India that could happen?
Yeah, so I think we have a very interesting page on this actually in the context of payments, and we do a survey year on year which measures trust of different people, both for their banking relationship, A with their primary bank, B with fintechs, and C with their other banks, and D with all other players who are there in the market. And what we have found is over the years, the tech players have caught up. So the likes of Paytm and Google Pay, etc., while they started out much lower than banks in general, now have caught up. They have overtaken banks in general, are now only a notch below the primary bank in case of trust, in the context of trust. So what I want to say through that is, it's a matter of time. I think it will call for some investments in marketing dollar, etc. It's not going to be easy, especially because people are parting with their money. But I think this trust can be earned. And there will be hiccups along the way and so on. But I think this trust can be earned, and people, the way payment players have done it, and now they rank above banks in general from a trust perspective. I think there is an opportunity there for neobanks to claw their way up. Of course, it's not going to, the customer is not going to open her primary bank account to the neobank just yet. But this is a slow and steady race, and you win by just staying in there and serving the customer well.
Awesome. Thank you so much, Ram, Bharat, really informative session. I really enjoyed it. I'm sure our audience did as well, and we hope that you guys, enjoyed being here, because we loved it and we're very grateful. And we hope that you'll tune in next week to see the presentations and see some of what our participants built. So on behalf of everybody at Sahmati and iSpirit and part of this hackathon, thank you very much for being here. And please show your appreciation, audience, through virtual emojis, as you know how to do. Amazing. So a little bit of housekeeping before the last word, which is that if you're attending the hackathon and you're presenting to the judges, then please look at the chat. I'm going to put a link there, and by 11:59 p.m. on Friday, that is before 1st August, you need to submit your project summary on DevFolio in the format that I'm sharing in the chat. And then on Saturday, you'll present your projects. The winning, the top project will present again on Sunday, and that's where we'll have the closing ceremony with prizes and stuff like that. So thank you everybody for tuning in to listen, and thank you very much once again, Ram, Bharat, and also Angad. Thank you so much.
Thanks. Thank you. Bye.
Bye-bye.